Next, the gentleman from Florida, Mr. Klein.
Thank you, Mr. Chairman. Thank you, Mr. Secretary. Good morning. First, I want to join the gentleman from Texas in his comments about the interrelationship between the markets overseas. A number of us in a few weeks are going to be meeting with the transatlantic dialogue with the European Union countries. So as we progress through this, we'd like to make sure we're all up to speed and can have those conversations with them so that we can obviously get it the way we want to get it, but at the same time, they're not doing something inconsistent. We're obviously talking today about the importance of handling the insolvency of non-bank financial institutions, and I fully support, first of all, the notion of an integrated system that looks at a systemic way of doing this, but also note, as I think you're correctly presenting, every day that passes and we don't take the necessary action or have the clear authority for our agencies to take the necessary action, more money is being spent, more or less confidence is in place, and those are the things that need to happen as quickly as possible. We want to get it right, and I think we want to get a systemic point in place, but I fully support the notion of working quickly to get this organized. One of the points I want to make is as we get into the breaking down, the merger, the acquisition, the selling off and liquidating, I want to make sure that there's been some criticism in the past that sometimes no bid contracts were used, certain organizations were given priority. Very important to the American people in terms of confidence that there is an open, competitive bidding process. There are a lot of qualified companies around the United States that can help assist in this area. And if you can make it absolutely clear that that will happen, and if you can comment on that.
Oh, I completely agree, and I think that you're right. Confidence in the basic integrity of that process is critically important. And again, I really think the FDIC has great experience in designing procedures that meet that test. They're very sensitive to that concern, too. We want to build on that model and, of course, open any suggestions of how we do a better job of assuring that.
I appreciate that. And secondly, I think from a taxpayer point of view, everyone in the United States is concerned. They heard about the AIG payouts. It was, yes, it was the amount of money, but it was also the principle of fairness.
Yep, it was.
This just struck people as totally unfair. Right. They're struggling in their own businesses and their own personal lives, yet these payments took place. It's very important that these contractors, these parties that will assist us in helping this orderly liquidation, which in time will save taxpayer money. It's also important that, yes, there will be fees paid to these organizations. They should get a reasonable compensation. But the taxpayers have to feel there's an upside in the sale and liquidation of these assets, so they don't see money getting paid to a private organization, which they're entitled to. But at the same time, the taxpayers feel it's on our dime. We're not getting anything out of this. If assets don't have zero value, they have some value. We need to make sure that taxpayers feel like they're getting their fair share on the upside.
I agree with you completely, and that's why in our proposal, there's $1 of taxpayer capital alongside $1 of private investment, and so the taxpayer will share in any gains that come from the purchase of these assets management over time.
And if we can make sure that's very clearly articulated every step of the way. The next step I'd like to bring up is the whole notion of too big to fail, which is nauseating to most Americans, of this idea that businesses were allowed to get so big they couldn't fail, and yet you have smaller banks, for example, that can't get TARP money, can't get assistance, and they're on the edge, and yet other companies, just on the click of a dime, they get a huge check. This notion probably goes back to the chairman's comments about antitrust laws were created many years ago based on consolidation of economic power, which drove anti-competitive activity. Antitrust laws, by and large, many of them have not been as enforced as many people would like to see, and that allowed for large consolidations to occur, which in free enterprise we understand is fine as long as there aren't adverse consequences. Adverse consequences is anti-competitive activity. In this case, adverse consequences was this notion of a disaster that we have to put money into. As we move forward with the systematic regulation, there has to be a notion of definition of how we avoid organizations getting to the too big to fail category. Do you have some thoughts on how we're going to integrate that into our law and the regulation?
We're a nation of 8,000 to 9,000 banks. We're a much stronger country because of the hundreds and thousands of smaller institutions that operate in our communities across the country. They were mostly not part of the problem. They're going to be part of the solution going forward. It's very important they have access to capital on the same terms that large institutions do, and we're moving very, very quickly since we came into office to try to make sure that we're accelerating the procedures at the Treasury to make sure they can have access to capital. Now, in our proposal, as you saw, we want to hold the large institutions to stronger, tougher, more rigorous standards, tougher constraints on leverage. That will help counteract this risk that we have further consolidation over time to leave the system more risky. But you're absolutely right to underscore the importance of effective antitrust enforcement, and we have significant, we have these caps now on the scale of share of deposits that any single institution can have across the United States. We want to keep those in place because we want to have a system that still relies on not just a few large institutions, but hundreds and thousands of smaller institutions across the country. And again, if you look at what's happening across the country, they're bearing a lot of the burden for filling the gap left by those institutions that have to pull back now and get smaller because they took too many risks.
Well, I look forward to working with you on that notion to make sure we don't have another too-big-to-fail scenario, but we allow a free enterprise system that is healthy and allows banks and others to thrive. I thank you, Mr. Chairman.